In the Black Out Loud.
GST reform in focus. After 25 years, the Goods and Services Tax, GST, is at a crossroads, with calls for reform growing louder as Australia grapples with an evolving economic landscape and a tax system that relies heavily on income taxes. By Alexandra Cain. This article has been edited for audio purposes. Article begins. The Goods and Services Tax, GST, has been a fulcrum in Australia's tax system since 2000. Designed to be a broad-based 10% consumption tax, the GST, together with new wine equalisation and luxury car taxes, was meant to replace the sales tax system. The GST was also designed as a mechanism for the federal government to transfer growing levels of guaranteed funds to state and territory governments. However, the GST has been beset by complexities, and the economic landscape is very different now compared to 25 years ago. A quarter of a century after its introduction, there are plenty of eyes on the GST as the answer to some of the tax system's inefficiencies and inequities. Australia's tax base is being eroded by a declining share of consumption taxed under GST, coupled with a fall in revenue from other consumption taxes like tobacco excise and fuel, explains Jenny Wong, Tax Lead, Policy and Advocacy, CPA Australia. This highlights the urgent need for alternative, resilient revenue streams, with the GST a primary candidate, she says. The federal government hasn't ruled out raising the GST rate. 15 is the most commonly proposed percentage level, backed by bodies like public policy organisation, the Grattan Institute. While many food products and health services were initially carved out of the GST, there's now the potential to broaden the range of goods and services to which the GST applies. Why change is required? There are baked-in inefficiencies in the GST base that were necessary to gain Senate support to pass the ANU tax system, Goods and Services Tax Bill, in 1999. This includes the tax-free status of some goods and services, but not others, a remnant of the previous sales tax system, and the inconsistent treatment of beverages, food, and health products. The question is whether it is time to reassess these exemptions. Effort was made to design the GST to achieve fair and equitable outcomes for both businesses and consumers, says Ken Fairley, partner and director of GST specialists firm Fairley Advisory. But they're no longer working as effectively as intended. A major overhaul is well overdue and needed, he says. Reforms to GST on social housing and supported housing and the Australian Taxation Office's ATO differing treatment of build-to-rent developments at scale also need to be addressed. These complexities create barriers for developers and consumers. A comprehensive review of how GST applies to residential housing is essential to ensure it supports access to affordable housing, says Fairley. The administration of the GST is another area requiring attention. The system is governed by a multitude of complex statutes, including the Taxation Administration Act 1953, a new tax, Goods and Services Tax Act 1999, and many associated regulations that make compliance daunting. The ATO has frequently been surprised by unfavourable judicial outcomes regarding its decisions on GST interpretation and administration. Likewise, wins for the ATO have often caused significant unexpected problems for businesses. We need faster and clearer guidelines, a more straightforward approach and legislative fixes, Fairley says. International comparison. A glance at the way other countries apply their consumption taxes shows there is plenty of scope for Australia's rates to increase, with the GST's contribution to overall tax revenue in Australia relatively low compared to international standards. The latest figures released by the Organisation for Economic Cooperation and Development, OECD, show value-added taxes accounted for 11.5% of Australia's total taxation in 2022, the lowest in the OECD. Globally, the trend has been for standard broad-based consumption taxes to rise, while specific taxes on consumption like tariffs have generally decreased. Australia's 10% GST rate is the lowest among OECD countries that have a consumption tax, contributing a significantly smaller share to tax revenue compared to the OECD average. Many comparable nations are already relying more heavily on consumption taxes, Wong says. Countries like the US that lack a national consumption tax tend to compensate with tariffs. These are considered to be a less efficient way of collecting revenue from consumers, Wong adds. Clear direction needed. Experts say it is essential to consider raising the GST rate or broadening the base of goods and/or the services to which it applies. While this may be politically contentious, it could lead to personal income or corporate tax rate cuts, creating a more equitable tax landscape. Any increase would need to be handled carefully. In the current cost of living environment, if the government went down the path of raising the GST rate, or if the base is broadened, it could be quite politically sensitive, says KPMG Australia tax policy lead Aaliyah Lum. Compensation for lower-income households will be an important part of the package, she says. The federal government would wear the political cost of any rise in the GST. I don't think any federal government is going to see that as a good idea, says economist Saul Eslake. A prerequisite for any reform to the GST would have to be breaking the nexus between revenue from the GST and payments by the federal government to the states and territories, he says. There is a view that GST reform would be most powerful if it enabled other tax reforms at the state level. The GST is the only guaranteed and untied revenue the states and territories receive. Their other major sources of revenue are generally the worst taxes from an economic perspective, says Grattan Institute CEO Dr. Aruna Sathanapalli. These include stamp duties and payroll tax. The GST legislation and intra-government agreements passed in 1999 say changes to the GST rate and base require all states and territories to agree unanimously. As a matter of constitutional power, the federal parliament could change that legislation. But as a matter of federal practice, a conversation around the GST should be a conversation with the states, says Sathanapalli. GST reform is interlinked with broader changes needed to improve the tax, economic and welfare systems. Fairley believes this needs to be underpinned by a cohesive, shared vision about what the community wants Australia to look like by 2050. Without a clear direction, we risk stagnation or aimless ad hoc changes driven by political interests, he says. With no substantial tax reform undertaken in Australia for many years, the need for a staged approach is a popular view. The government should develop a 5 to 10-year plan that includes improvements in administration, as well as permanent compensation and personal income tax relief for lower earners, says Wong. While raising the GST may not be appropriate at this time due to the cost of living, we should still consider a pathway for future adjustments.
In the Black Out Loud.